Japan decides on policy on Friday and will release its economic outlook. What are you expecting and how are you now positioned in Japan?
Well, certainly we're seeing a commitment and we expect to see a reinforcement of the policy to reflate the economy. And we know that the BOJ have set themselves a target within 2 years of 2% inflation. That's going to be quite a stretch to get there, not least as the latest consumer price numbers year on year show a half percentage point reduction in prices, which is moving in the wrong direction. Now, of course, those numbers are slightly lagging, but it's going to make the job even harder. And I can see, looking at the markets today, there's some apprehension whether or not the BOJ's targets are credible, but we're certainly expecting to see a reinforcement of that, and probably as a result, equity investors will continue to be somewhat enthusiastic about a reallocation to Japan, and therefore the Nikkei has got further to run.
The biggest companies in Asia release earnings this week. What will they indicate and how will that change the way you pick your stocks?
Well, I think earnings are going to continue to be rather patchy for this year. We've seen some earnings revisions upwards, which is encouraging, but it depends which sector, which market. You've got differential performance starting to creep in once again to tactical asset allocation. If we look at the move in the markets that we saw in the fourth quarter last year and coming into this year, much of that was really on a re-rating rather than on earnings pickup. So we are overall, on balance, expecting to see a marginal improvement in EPS growth and carried forward into 2014. But I think most investors are really looking at the impact of increased flows to the region, and they're focusing on some of the fundamentals, such as improved sales numbers and return on equity.
China's official PMI data comes out next week. What will it tell us?
Well, we've already had a sneak preview of that with another unofficial survey coming out, which suggests continued weakness. The numbers we've seen would support the premise that the slower growth overall in the economy and slower growth globally in terms of trade is going to impact production. We've seen stockpiles reduced, and that's as a result of a need to clear stocks on lower prices. So that's not good for profits, and that's not necessarily good for ongoing production because the end demand is not really there. So we expect to see a weaker PMI consistent with the weaker economy generally that we're seeing sub 8% growth per annum.
What is your view now on commodities after the steep fall in prices and recovery?
Well, weaker global growth really does point to lower commodity prices. Short term, we've seen some improvement in the oil price, in the gold price, but I think as we work our way towards 2014, we're going to see a continuation of these weaker prices because global growth, it's really difficult to see how that's going to be improved upon significantly. Slower growth in China, a mild recovery in the US, and clearly Europe mired in recession.